Hello guys and welcome to another video. My name's Mark, I'm an entrepreneur and property investor and I've got about £3.5 million worth of property in the UK. So for me, what's going on with house prices really does matter. Now what we're going to do today is go through the Halifax House Price Index. It gives us a really good idea of what's going on in the housing market, although you must remember this always looks backwards. So we're looking at data from a couple of months back because we're looking at what sales have happened, what's been agreed, what mortgages have been approved. That's a reminder telling me to film this video, so I'm doing that right now. If you like this video, if you like this sort of content, please give this video a big like. It really does help me out with the algorithm. And if you haven't already subscribed, why not consider subscribing? So guys, let's get into the headline figures straight away because I think there's some really interesting things going on. I think it's important for us to have a backdrop of what's going on in the UK economy. And obviously there's some very negative things that have been happening, but that is leading to the market starting to predict a very buoyant future. And if you look at markets, they tend to predict what's going to happen rather than what's already happened. So the FTSE 100 is starting to rise, the German stock market is now at record highs. We've got all these things happening to the positive. Bond yields looking forward are dropping, so people are expecting interest rates to start to drop next year. So the markets as a whole, looking forward, are predicting positivity. And that is now coming through in house prices. Now, I've looked at a news article recently. We're down to below Bank of England rates for a 5-year fix now. So the market really is saying we believe that interest rates are going to start dropping the beginning, maybe middle of next year. I expect the same. I think that a lot of people have got less money in their pocket. You're looking at retail sales that have had the lowest quarter, last quarter, since COVID, since lockdown. So we're looking at very, very negative economic figures. And that means that the Bank of England and the government need to stimulate growth. They do that through two mechanisms, taxes and through interest rates. And that is what the markets are betting on. Monthly change, 0.5% to the positive, which means that for someone like myself, 3.5 million pounds of property, I'm going to see a net worth improvement of about £17,500. After the negative year that we've had, the annual change is now looking at only 1% to the downside. So my £3.5 million worth of properties across the UK, so I'm pretty diversified, they were down by about 6-7% at one point. It's now only down 1%. We've had the second consecutive month of growth in property prices. The average house price is now sitting at £283,615. And one of the things I've been saying on this channel for a while is you have to really take all of this with the backdrop of inflation. So if you consider that inflation's run over the last 3 years at about 20%, let's give it a number somewhere between 15 and 23%, depending on the reports you look at. Let's say 20, just to, nice and easy for us. House prices didn't drop by 7%. They dropped by 27% in real terms. And I've been saying that I believe there is a springboard of money to come back because wage growth is there. People can afford more, which means if interest rates come down, well, the good times, they're going to roll again. And this is what happens in economies all the time. You have contraction, and then you have expansion, and then you have contraction, and then you have expansion. And it's just the way that Western economies work, with this sort of interest rates to ease and then to release the brakes. And what we're really looking for is to try and achieve that inflation of 2%, which means that prices are always growing. Again, very important for an economy because people delay purchases if products get cheaper in the future. And that doesn't stimulate growth. So it's important to always have inflation. And if you look at all the Western economies, I mean, there's a couple of failed experiments, but the vast majority of Western economies, we're looking at stable inflation to create stable growth. So up 0.5% on house prices this month. Again, this is November's figures looking backwards a couple of months. So I think it's important to say that. I believe in real terms right now house prices are continuing to rise. Anecdotally, I'm hearing from agents they are getting busier, buyers are coming back to the market. I'm hearing that activity is picking up. So my expectation is the next couple of months we're going to see more positive data and we're going to very quickly see that annual change turn positive rather than negative. And it's hard to believe that only 3 or 4 months ago we were looking at sort of 4 or 5 or 6% annual change to the negative. Now only 1%. One of the really interesting things about this house price index is it really does break it down by nation and by region. Now, as you'd expect in a higher interest rate environment, the south of England, where property prices are generally higher, those are the ones with the larger mortgages. Therefore, those are the properties that are more affected when you look at interest rate rises. So if you've got a £300,000 mortgage, you're obviously far more affected by your mortgage doubling than somebody with a £100,000 mortgage. You know, a £100,000 mortgage, maybe you were paying £200-300 a month, now you're paying £500-600 a month. But if you had £300,000 and you're paying £600-700-800, and now you're paying £1,800 or £1,600, it's doubled, that's a massive difference. So that's where the price drops have happened the most. So 5.7% over the course of a year, I'm just checking my figures on here, and only up north, we're looking at property prices actually growing. Northern Ireland's grown over the last year, Scotland is absolutely zero. Wales is 1.5%. Again, cheaper house prices mean the drops have been far less severe. So one of the reasons I make sure my property portfolio isn't concentrated in one location is that I have this diversification. I have some properties in the south, I have property in London, I have property in the north, I have property all over the UK. And by doing that, that does mean that I am insulated against any regional differences. For example, if Sheffield did terribly over the next month or year or 2 years, I have 3 properties in Sheffield, I'd be affected. But I have 12 properties that aren't in Sheffield, and hopefully they would make up those losses. So this is why I make sure that not only am I geographically diversified, but I'm also property type diversified. So I have a couple of big 4-bedroom detached houses, which are now HMOs. I have a few 3-bedroom houses, I have some 2-bedroom houses, I have some flats. I make sure that I'm diversified across the board. And by doing that, I insulate myself against any of these major risks in one location. Guys, sorry to interrupt this video, but I wanted to give you this information, and I promise it'll be no more than 15 seconds. If you want to have a free one-to-one consultation with me, a quick chat about anything at all you need to do is click the link in the description. It will give you a quick form, fill out your details, Tom will get in contact and book it into my calendar with me, then we can have a free consultation. I'm doing this for anybody who wants to talk to me until I get to 10,000 subscribers. So guys, let's get back to the video, but fill in the form, have a chat. Now let's look at the actual data coming through from the authorities. So HMRC are saying that home sales decreased in October, seasonally adjusted down 2.5%. That's a reasonable decline in property transactions, but we're also saying that there's less properties on the market. So if supply and demand both decrease, property prices may well stay fairly stable. And 0.5%, let's face it, it's not a massive rise, is it? Bank of England says approved finance house purchases have grown by 8.5%, probably reflecting that mortgage rates are coming down and people are feeling more and more secure about fixing in at a lower rate. So the RICS have said basically that the house market is still a bit subdued, but it's less downbeat than last. And actually we've seen an increase in new buyer inquiries. And again, that would fit with the anecdotal data that I'm getting. So this is the Royal Institute of Chartered Surveyors. Those are the ones that are reporting on the net balance of sellers and buyers. And they're basically saying that buyers are returning to the market. Although it's still downbeat, it's not as downbeat as last month. So that's pretty much everything in terms of what Halifax is saying. Now, what I want to say is that I'm still betting on the UK property market. I'm still making sure that at the moment, I'm living my life as affordably as I can. I'm looking after my pounds because I believe we're still sat on a really big opportunity where when those house prices start to rise, if cheap money comes back to the market, wage inflation's already taken place. Inflation's already taken place. Relative to those things, house prices now are down significantly. I think there's a good opportunity to get back that deposit. If you're buying with 25% down, I think there's a really good opportunity in 2 years that you'll see that 25% back in house price growth. And if I can buy with a 10-15% discount, and I'm still negotiating for discounts at the moment, I can get between, around about 10%, I'm really, really happy, then I think there's a really good opportunity when it comes back to refinancing in 2 years, I'm gonna be in a really good shape to get those deposits back. But guys, what are your thoughts? I'm currently looking to save up my next deposit, make a new purchase. I haven't got any remortgages coming up on the horizon, so I've got no opportunity to refinance and take money out. I've got quite a lot of mortgages that I fixed at 2020, 2021 at cheap rates for 5 years. Again, I'm not going to touch those just to withdraw some money out. Those are going to stay as they are because the rates are so cheap at the moment. Until cheap finance comes around, again, People like me, when those interest rates drop, I can take the plunge and I can start refinancing some of those properties. But at the moment, I'm not giving up on a 3% HMO mortgage in order to release 50 grand at 8% or 7%. You know, that's just not happening. But bring those interest rates down and it's going to spur people like me on to make more investments. So guys, this is what we're waiting for. We're waiting to see the Bank of England change their policy. They've already stalled. They're going to convert to cuts. I am absolutely convinced of it next year. I'm seeing it in every bit of data that I'm looking at. I believe cuts are on the way. The market believes cuts are on the way. When they do, I think house price is going to rocket. I'll see you on the next video. Subscribe if you haven't already. Give this video a big like. It really does help me out. I'll see you next time. Cheers, guys.